political activities, geopolitical stuff. That's all of that is kind of elevated. So now there's a multiple things that are similar. And the last point I'll make there is that so far with Doge, and my general thesis, and we have to kind of watch this play out to see if it's correct or not, and I would reassess based on how things go, is I generally take the under on how much deficit reduction Doge is going to have in the raw dollar sense. And
Right.
so I think they're going to have and they already have, but I think they're going to continue to have like a lot of little optical wins.
The story of Bitcoin's 4-year cycle is over. The next thing it does will be something no one has ever seen before. Investors used to think that Bitcoin was stuck in a cycle where amounts were cut in half every so often, but that's no longer the case. It's not what people thought Bitcoin would do to markets as it becomes more integrated into the main financial system. Bitcoin doesn't move in a simple way anymore. There have been happy rises, painful consolidations, and breaks in the price. A financial expert named Lyn Alden says this old theory is wrong, and that comparing Bitcoin's market cap to its realized cap is the best way to figure out how people feel about the market. People are getting excited when the market cap goes up too quickly. This means that a correction is on the way. But Bitcoin hasn't even come close to hitting the all-time highs it hit in previous cycles. Things are changing in a different way this time, and the market could stay stable for months at a time. Bitcoin is always making new rules, and the next move might be a surprise to everyone. People who want to know more and know what's going on in the world should watch Lyn Alden's explosive interview.
If you one of the benefits of Bitcoin, like gold, is you can self-custody it. So instead of having like an entity holder for it, you can self-custody it. Um, and what kind of security or hardware device you should have, or how many, would really depend on how many Bitcoins you're storing. If someone's holding $1 million worth of Bitcoin or $10 million worth of Bitcoin, that's different than someone who has $2,000 of Bitcoin kind of tucked away in a sock drawer, right? So there's a difference of variable. There's like some cheaper methods, like say tap signers. These are like NFC cards. They cost maybe, I don't know, off the top of my head, $20, $30. And they're like really great for kind of lower amounts of Bitcoin. And then as you get kind of higher, uh, some devices are $100 or $200, and those are kind of suitable for holding more substantial amounts
Yeah.
of Bitcoin. And then when people want to get really secure, there's multi-sig. So you can set it up so that it takes 2 out of 3 keys or 3 out of 5 keys in order to spend or move your coins. And so you can have, say 3 hardware wallets and then a mobile device and then a company that holds the 5th key for you, or some kind of combination thereof, and you can split the locations of those up for those people that are holding, millions of dollars worth of Bitcoin and don't want like a $5 wrench attack to kind of come after them. So say, hey, you want my Bitcoin? You got to drive me around all my bank safety deposit boxes and see how that
Yeah.
goes. So it really, I would say, really depends on size of the holdings and then also education level, right? I mean, but some of these are pretty simple. Other ones are pretty complex. It's not really rocket science, but there is a learning curve. You're kind of storing your own money, similar to if you were to hold gold in your house. You have to you have to understand what you're doing. So um, that's kind of my range of answers. It really depends on how much. But during I've had the general view of this whole kind of quote unquote fourth turning environment, that there has been this kind of structural shift toward higher levels of populism. And of course, they
Right.
ebb and flow, but you generally get higher highs and the higher lows of populism. We've seen this in North America, really ever since like the whole kind of post global financial crisis. So Tea Party, and then MAGA, and then on the left you've had the kind of similar, like the you know, BLM, and not to get into everything, but you had these kind of rising political tides. And of course, in Europe, there's been, especially ever since the sovereign debt crisis there, some of the more right or kind of nationalist, kind of less greater Europe and more kind of focused on a country. Those parties have been gaining traction. I generally expect that to continue to increase until there's some um, game change shift, like kind of major geopolitical alignments, major currency moves, major shifts that happen. So I generally am of the camp that political uncertainty is going to continue to be high. That doesn't mean that sometimes it doesn't go down for a period of time, but it's going to be an ongoing thing because the pendulum tends to swing kind of back and
Love that
forth.
analogy.
Yeah, and we've been, especially the past few years, you kind of hit one side, and there's been pushback on that. So I think that that pushback, I think, is still underway, meaning that we're probably still moving toward more populism and on average a little bit more kind of like right. It depends on the place. I mean, right and left differ depending on what place you're like. European right and North American right look pretty different. And European left and North American left look pretty different. But I generally think that, yeah, the pendulum's kind of still swinging away from where it kind of hit in, say, the 2010s. Yeah, so I think the short answer is that liquidity crises trump inflation. So when there's high inflation, central banks generally want to get tighter. But if you have a dislocation in the treasury market, if you hit the liquidity floor in like bank reserves and you start to get really messy quarter end stuff every time, central banks kind of have to step in, and that's kind of part of their kind of informal mandate. Um, we see there's kind of two ways you can look at this. So one is in developed countries. Back in the last time we kind of had this kind of fiscal dominant environment was all the way back in like the 1940s, and you had very high inflation associated with the war, and you had central banks saying, "Look, it's the war. We gotta pro liquidity into high inflation to support it." Um, and then a less extreme example is just like in developing countries around the world, they'll have above target inflation, and the central bank is still basically monetizing government deficits. Now that's why those currencies are often less attractive, but you generally see less extreme versions of that in um, uh, developed countries at times when you have very large fiscal issues and other things. Like I don't think that like if you have a dislocation in the treasury market, fiscal deficits are high, you're not going to get emergency cuts to Social Security, Medicare, or defense to the tune of hundreds of billions of dollars before you're going to get the Fed say, hey, for technical
Yeah.
ample reserve reasons, we're going to go to a neutral balance sheet approach, or we're going to get back to normal of like, keeping balance sheet growth in line with GDP growth. I think they're not like high inflation means that they generally can't say, hey, we're going to stimulate by doing a lot of excess QE to promote growth. But it doesn't really prevent them, at least the way they kind of, I think, look at it or kind of have to look at it, is to say, well, we're going to keep the wheels on the cart uh, with like liquidity and market functioning, not stocks per se, but like repo, treasuries markets, those kind of core markets. They keep the wheels on those kind of regardless of what we see on the CPI print.
The way Bitcoin and stocks work together has changed a lot, thanks to spot Bitcoin ETFs, liquidity, and more market integration. Because of these things, Bitcoin has become a quick sign of liquidity that moves more quickly than gold and stocks. No longer does the old 4-year cycle matter. Bitcoin is very adaptable, which makes it valuable for everyone, no matter how many coins they have. Bitcoin's self-custody feature is a big deal because it lets people keep all of their own money. Fiscal deficits have become big market drivers that change how financial markets work as central banks try to keep inflation and liquidity in check. Key banks are stepping in to help as treasury markets get stronger, so Bitcoin plays an even bigger part now. Bitcoin is no longer just seen as digital gold. It is now a strong force that is shaking up the world of hard money and even testing precious metals like silver and platinum. It's clear from these changes that Bitcoin is going in a new and different direction in the world of money. There are also changes in how people think about wealth and assets. People who want to know more about the interview should look at more clips of it.
So the short answer is I think fiscal dominance is still just as important, but other things have elevated importance to be of a similar level. And so, if you go back a few years during, say, the 2020, 2021, 2022 even, that was a very headline-driven environment. And by the time we got to 2023 and 2024, things were more mechanical. A lot of the kind of
Right.
the fires were put out. It's less headline based. It's more like managing liquidity, watching liquidity, looking at the banking system, just kind of like you could kind of predict a series of things going forward. At any given time there might be a debt ceiling, and then you got to monitor TGA and liquidity impact because that has all sorts of asset price implications. The regional bank crisis was an interesting thing to work through, but that kind of was like a lot of that was kind of on autopilot in a way. kind of back to more traditional macro. And 2025 has put us back in a headline environment again. And so things like major tariff announcements, um, Doge related activities. There are a bunch of different things that can like happen and have happened. Where you could have a whole
Sì,
thesis and
sì,
then
sì, c'est bon,
5 minutes later there's a headline and you have to kind of like rewrite part of your report or change an aspect of your portfolio or something. And so it's not that I think fiscal is less
Yeah.
important, but I think that things like tariffs and potential currency accords, um, political activities, geopolitical stuff. That's all of that is kind of elevated. So now there's a multiple things that are similar. And the last point I'll make there is that so far with Doge, and my general thesis, and we have to kind of watch this play out to see if it's correct or not, and I would reassess based on how things go, is I generally take the under on how much deficit reduction Doge is going to have in the raw dollar sense. And
Right.
so I think they're going to have and they already have, but I think they're going to continue to have like a lot of little optical wins. And a lot of some of those are very politically impactful, certainly. But in terms of like fiscal activity on inflation or on nominal GDP growth or on certain sectors, so far, I think that's they're avoiding a lot of the really big areas that are like the third rails to cut that are very politically challenging. And so my general view is that when we get to say mid 2026, which is originally when Doge said they wanted to kind of have a lot of their cuts in place, like that they kind of gave themselves sort of a pseudo end date because that's the 250th anniversary of the country. So it's kind of like a very
Yeah.
memeable date. Um, and I think when we look back from there, I don't think that cuts will be massive, but I think that we're at least in kind of a physical consolidation at the moment. But we'll see what the numbers come in over the coming quarters. Yeah, it's a good question. And certainly between tariffs and Doge, I certainly view tariffs as a much bigger variable for my analysis than Doge. So I'm not taking tariffs maybe as quite as
Right.
lightly as I'm taking Doge, because when you've major headline announcements like 25% tariffs across the board on a major trading partner, or hey, we're doubling tariffs on China from 10% to 20%, and then you might roll that back, might not, and then um, that certainly, as you said, creates a very uncertain environment. One is for business investors. If you're trying to make contracts, it's just very hard. It's harder to do. This is
Yeah.
already the case in developing countries when they have kind of recurring inflation currency debasement problems. Like we were talking before the call that I spent a good time of each year in Egypt, and so there the double digit inflation is normal there.
Yeah.
Um, and you can imagine that you have to shorten contracting time frames. There's just more balls in the air that you have to juggle in that kind of environment, and that's all a administrative cost, and it reduces certainty. And there's a similar effect with tariffs. It's not quite the same thing, but when especially if you're involved in kind of major capex planning, or you have a lot of cross-border trade, it does create a lot of uncertainty at the business level, and then of course at the investor level, because stocks are, at least fundamentally speaking, in the grand sense. I mean, any given week or month or even year, it's mostly liquidity and sentiment. But longer term, a lot of the stock valuation is forward long-term expectations of cash flows and overall, company success.
Yeah.
And there's a much wider range of variance. This again more headline based. So I generally started this year, not like a mega bear, but just like more kind of cautious around this
Right.
because we entered this Trump administration with a higher equity valuation than his prior administration. So it's already like priced even more for perfection than it was in his prior term. So there's certainly a lot of risks on the market, and I take the tariff side pretty seriously.
For many years, Bitcoin has been regarded as digital gold, a limited edition asset that acts as a hedge against inflation. Recent patterns, however, indicate that Ethereum may pose a threat to Bitcoin's hegemony. Ethereum's supply model is more adaptable than Bitcoin's strict 21 million cap, enabling it to grow or shrink in response to network activity. Ethereum's issuance has slowed, and its total supply has occasionally dropped since its 2022 merger. Because of its versatility, some people are wondering if Ethereum is becoming a more dependable currency than Bitcoin. According to financial expert Lyn Alden, Bitcoin has a distinct advantage as a store of value because of its rigorous scarcity model. She does concede, though, that there is no one-size-fits-all approach to monetary systems. In the past, inflexible frameworks such as the gold standard provided stability but restricted economic flexibility in times of recession. The dynamic supply model of Ethereum provides a compromise by striking a balance between flexibility and scarcity. Ethereum's economic model is proving to be a competitive alternative to Bitcoin, which is still the more well-known form of hard currency, especially in light of shifting market conditions. The ongoing controversy between Bitcoin and Ethereum is highlighted by the recent announcement of a crypto strategic reserve that includes both of them. As institutional interest increases, the question is not only which cryptocurrency, Bitcoin or Ethereum, is better, but also how their divergent monetary policy philosophies will influence the development of digital assets in the future.